Well, hi everybody. Today we have with us to the great Jake Bernstein. Uh, Jake was kind enough to accept my invitation to give a talk to students in Robotrader. In fact, he tell me if he has to give all the sessions in the course, but I tell him that it was just one. I knew Jake because I read this book, The Investor's Quotient, in 2000, in the year 2000. And from this time, I start following him. He doesn't know this. It was a long time ago that I start following Jake, and I think he's a great person, has a lot of knowledge, and he's here to share some of his knowledge. So whenever you're ready, it's your turn. Jake, it's up to you.
Eduardo, thank you for the very nice introduction. I appreciate that. I will do my best to give you clear information about what I do. First, I'll tell you a little bit about myself. I started trading in the summer of 1967, many years ago. I wrote about 45 books. I'm a real trader, which means that I trade almost every day. I'm an investor, and all of my work is very specific. It's rule-based. It's very clear. I'm a numbers person. I like numbers. If I don't have numbers, and I don't have performance history, and I don't have specific entry and exit, I don't trade. So I've been teaching all over the world. I've traded all over the world, many seminars, many webinars. I'm a member of the board of directors for the study of cycles. I have been on Wall Street Week, CNBC, CNN, FNN. Very simple, I'm not a broker, I'm an independent trader, and I publish my work for other traders. So the tools that I use are basically the same all the time. Moving average channel, seasonals, divergence, what I call 8 open close, and the 3x3 channel, some of which that I will teach you today. But here is the most important thing. In order for me to take a trade, even if it's a day trade, I need to know everything about that trade before I take the trade. So this is my list of what I need to know. The good news is, if the method is algorithmic and it can be tested on a computer, then the rules will be clear. But most people can't test it on a computer because what they do is not based on rules. So everything that I teach you today will be based on rules. You can try it yourself. You can see if it works. But the good news is you could probably make it better. So I need to know which market to trade. I need to know buy or sell. I need to know exact time to buy or sell, or the exact price. I can't look at a chart and say, I think I should get in here, or maybe I should get in here, maybe I should get out here. That does not work for me. I need to know the track record, my odds of success. I need to know average profit, average loss, my stop loss, my risk, my target, my profit to loss ratio, my track record, average profit, average loss, largest profit, largest loss, drawdown, upswing. All of these things I need to know. The good news is we can know all of these things. The bad news is most people have no idea how to do it. So I need to know all of these things, and I will not take a trade unless I know everything about the trade in this specific way. So I use a model called setup, trigger, follow through, the trading model. Every trade has to have a setup. A setup is a pattern. Every trade has to have a trigger, which is timing. Every trade has to have follow through, which is stop loss, profit target, and profit maximizing strategy. So let me give you an example of what I mean. In order to do that, I'm going to switch screens and show you a little day trading method. So just bear with me. I'm going to change screens. One moment, please. And so let me go full screen and show you this. So here we go. Okay, so let's do this. So we know that there are many patterns in the market. These are the 5 books that I've written on day trading, in case you're interested. So let me give you an example. Here is a pattern that many traders look at. It's a key reversal. The low of bar 2 is lower than the low of bar 1. The high of bar 2 is higher than the high of bar 1. The close of bar 2 is higher than the close of bar 1. It's a pattern. Because it's an algorithm, we can put it on the computer and we can test it. Does it work? Does it predict anything? When we put it on the computer, we find out the accuracy is maybe 50-50. If we take the same pattern and we add one rule to it, the close on bar number 3 must be higher than the close of bar number 2, than the high of bar number 2. We have a strategy that can be back tested. And here are the results. With this one, 40%, 47% of the time, you will have a profit within the next 7 bars. With this one, 83% of the time, you will have a profit target. 71% of the time, you will have the opportunity to take a profit within the next 7 bars. So this is 50-50 probability. This is significantly more probability. So this is what I mean when I talk about a pattern. I can take that pattern and I can put it on a screen. I can run statistics on it, and I can have a rule. But let me show you a different pattern. So this is my algorithm, my strategy, my model: setup, trigger, follow through. So for everything I do, I need to know all 3. The setup is a rule-based pattern. The trigger is timing. The follow through is stop loss, first profit target, and profit maximizing strategy. Let me show you something. Here is a day trade pattern that I developed that I use. We're looking at S&P, and we're looking at 15-minute chart. So each of these bars is 15 minutes. For the first 15 minutes of the day, I do nothing, but I make note of the high and the low of the first 15 minutes. At the end of the first 15 minutes, anytime that I close below the low of the first 15 minutes, I'm short. If I close above the high of the first 15 minutes, I'm long. Very simple. My first profit target is 50% of the range of the first 15 minutes bar. So let me stop right now and see if there's any questions. I don't want to lose anyone. Any questions, Eduardo?
Not so far. Just
Okay, good.
to the audience, I tell that you can put it in the chat box, and I will
No
read
problem.
to
No problem.
Jake.
So in this case, we would be short right over here. Remember, we are short not during the bar, but it must close below this low. It must end the bar below this number. We then take 50% of this range, and that becomes our target number 1. 100% of the range becomes target number 2. So you can see what happened for the rest of the day. Down, down, down for the rest of the day. Most of the time, the trigger will happen during the first 2 hours of the day. The stop loss. If we then close above the high of the first 15 minutes without hitting the first target, we reverse the position and go long, covering the short position. Very simple, very clear. Let me show you another day, and then we'll look at what happened today. So here is, and here are the rules, by the way, right over here. So here's another day. First 15 minutes, and you can see up to this point, no buy, no sell, no trade. Here's another one. First 15 minutes, January 31st. First 15 minutes, buy trigger, first target, second target, end of day. Another day. Early in the day, setup, trigger. Here's another day. Setup, trigger, and look what happens. It doesn't hit the target. Why? I'll tell you why. If the range of the first 15 minutes bar is too big, the probability of hitting the target is very low. So if the first bar in futures, S&P futures day session is more than 1,500 US dollars, there is no trade because we will not hit the target most of the time. I want to make sure everybody understands that. So let me go to the next one, and then we'll look at what's happening today. So here's another one. First 15 minutes, sell, target, down for the rest of the day. First 15 minutes, buy trigger. If we measure this bar, you will see it was too big, therefore no trade. Let's go to another one. Here, example. First 15 minutes, sell trigger, 50% of the range, profit target reached. Next day, first 15 minutes, sell trigger, full profit target reached. So let's take a look at what happened today. So let me do a new share and go to the live screen. One moment, please. Here we go. And we'll go to the live screen. One moment, please. So here is the live screen of what happened today. So let's take a look. This is the day right here. We're going to go to the first 15 minutes like so. One moment. First 15 minutes right over here. And over here. Just a moment, please. I'm doing this manually instead of automatically. Here we go. So what happens? Here we get a buy. We measure the range of the first 15 minutes. Futures, day session S&P, $837. So the first target will be half of that, approximately $415. So we triggered, we followed through, reached the target, number 1, took 1/3 of the profit, placed the stop at break even, we're out of the trade. Now, the next trade gave a short. We are now short the market, waiting for the first profit target, the stop, 15-minute close above this high. Let's go to the previous day. So let's go to Friday of last week. So here is the beginning of the day, Friday, the 4th of February. The first thing we want to do is measure the range of the first 15 minutes. If the range of the first 15 minutes is too big, there will be no trade. So let's measure it like so. And you can see the range is greater than $1,300, therefore no trade. If there's no trade, there's no trade. Let's go to the day before. The rules are very clear. Let's go to this one over here. The day before. One moment, please. First 15 minutes. Well, first let's measure the range. And you see right now it's completely mechanical, but if you program this algorithmically, it's very easy to do because the rules are completely clear. And so let's look at the range. The range, acceptable. So let's look at what happens. So we're going to go to the first 15 minutes like so. Right over here. And let's take a look. The high of this bar is 452850. The close here is 452975. Trigger. It does not hit the target. So what happens later in the day? I'll show you. We get stopped out, but we also reverse the trade. And by reversing the trade, we capture back some of the loss. So we trigger right over here, the short, and you can see what happens to the rest of the day. We make back some of what we lost. It's very clear, very simple, very easy to do, very effective, not perfect, but very effective. Let's go to the day before. Again, the same procedure. Let's look. First 15 minutes, like so. And this is so easy, even a computer can do it, huh? So let's measure. Like so, $900, acceptable. The low of this bar was 45.50.50. The close here is 45.50.25. Trigger. Let's put the lines in. As you know, very easy for a computer to do this. But I'm showing this to you mechanically so that you'll understand it clearly. So there's the trigger. And when we trigger, we buy or sell at the market. So after the trigger, we need at least $450 per contract profit. How much did it move? Let's measure it. Show it to you again. Here you go. From here to the low of the day. Profit target hit. No problem. Later in the day, what happens? So we take our first profit target, we reduce the risk to 0, so we have a stop at break even. Then later in the day, let me show you. So we had 2 trades that day, both winning trades. One moment, please. Here you go. And the profit target again, $450 for the first target. Like so. One moment, please. Here we go. And you're always out at the end of the day. Market on close. Here you go. Did it reach the first target? Yes, it reached the first target before the end of the day. The trade is over. So that's the way the 15-minute breakout works. You can use it on S&P day session, the NASDAQ day session. You can probably use it on some of the currencies, although I never have. So I will stop for a moment and see if there's any questions. No questions? Must be clear. Okay,
Question so far.
so let me switch back to my presentation for a moment and show you something else. One moment, please. Let's do a new share. One moment. I'm going to go to the internet and share my
No.
screen.
Jake, there is a question now.
Yes, go ahead.
Is you use this system for the S&P, for the mini S&P, but there
Yes.
are any other product or future that you use this
Yes,
pattern?
the NASDAQ and the YM1, the Dow, the NASDAQ and the Dow.
Good.
Clear?
Very clear.
Okay, hold on a moment, please. Let me go to the internet. Hang on one second, please. Just let me switch my screen. One moment, please. Let me show you something else. Okay, can you see my screen at Seasonal Trader now?
No, not yet.
Oh, okay, just wait a second. Let me get it up on the screen here. Just a moment, please.
Yes, no problem.
Okay, what do you see now?
Yes, we see seasonal trader.
Okay, let me show you something else that I do. Very easy. So I'm going to go to Seasonal Trader, and here I can get statistics for a long, long time. Example, I'm going to go to Futures, S&P, like so. And I'm going to ask the question, for the month of February, are there any trades that have been right 70% of the time or more over many years with a duration of 25 days or less? So in other words, I'm asking you the question, historically in S&P, have there been any high probability trades short term? So I do a search. Computer says buying S&P 500, end of day, February the 5th, getting up February the 15th, has been right almost 80% of the time for many years. So if the trade comes on a date that's on the weekend, we take the trade at the end of the day on the next business day, which would mean buying at the end of the day today. So let me show you the track record. And this is the important part right over here. Here is the track record. Every trade, every year for the last 39 years. So we have a very impressive track record, like so. Cumulative profit, year by year, every single year, very high probability. So what else do I know about this trade? I will need a stop of 3.5%. My first target will be 23.6 S&P points. My average profit, my average loss, everything I need to know about this trade, completely clear. So let me go back one window for just a second and show you something else. One moment, please. I want to look at the seasonal trade. So here is the chart that shows the seasonal trade. It will take a moment to come up. Here it is. This chart shows me which part of the trade that I'm in right now. So hold on one second. Let me come down on the screen a little bit, like so. It shows February. These are the dates, the first 2 weeks of February. This is the trade right over here. So this answers the question, after this trade is over, does it continue to go up or does it go down? I can also zoom in on the daily movement. Let me show you what I mean. Hang on one second. It takes a moment to come up on the screen. So this is a weekly chart. And now we're going to switch to a daily chart. Here we go. Should come up in just a moment. It's a little bit slow, the computer. There's a lot of data it's looking at. Here we go. So now we look at the calendar and we see everything day by day. The green arrow, percentage of time up for the day. Red arrow, percentage of time down for the day. So today is the 7th. So we'll be somewhere here between these two. And this shows the beginning of the move that starts today and continues until about the 22nd of the month. We can do this on any market. So let me go back to the search. One moment, please. Example. I can go back to the search. I can say, for S&P, I'm looking for a bigger trade, a trade that lasts longer than 25 days. How about 50 days? We can do a research right over here. It's completely algorithmic, completely objective, no interpretation. So now we have trades that last up to 50 days. Let's take a look. One moment, please. I need to do the search again. Well, less than, we want greater than 15 days. So we'll go over here. We'll get rid of this one. So we're going to be looking at a longer term trade now, like so. So here are the longer term trades. You can see the probability of success as much as 80%. Let's look at this one. The history, 40 years of history, track record, every single year. And you'll see last year was the biggest year ever. So these trades continue to work over the course of many, many years. Very impressive. Let's go back to seasonal trader. And let's go to another market, like so. let me show you something else that you might find interesting. I'm going to go to the stocks, seasonal trades for stocks, US stocks. And I'm going to go to the Dow Jones. And we have data on the Dow Jones all the way back to 1920. So we're talking over 100 years of history. And I'm going to ask the question, for the entire history of the entire year, since 1920, have there been any trades that have been right 70% of the time or more? And remember, no fundamentals, no economy, no indication of anything about inflation, deflation, strictly history, strictly technical, no analysis, no Fibonacci, no Elliott wave. That doesn't work. So the question, 70% of the time or more. Let's search. We asked for 70%. The computer found us 83%. So let's look at this trade, 83%. History, 94 years, every year, like so. Track record, like so. So there is nobody in the business who has as much history as we do, and we can look at this trade in many different ways. Let me show you what I mean. Let me go back one page, like so. I can say, let's sort for a stop. In other words, I don't want to risk more than 10%. So I'll go like this, put in a stop, 10% risk, and rerun the data like so. What happens? I still get 83%, and this is my trade. Buying December 19th, exit January the 4th. This was run before we knew what was going to happen this year. And if you look at the charts, you'll see the trade worked perfectly this year. Again, very nice track record. And let me show you the seasonal chart right over here. Like so. One moment, please. And here is the data. And this is the part of the chart we're looking at right over here. So let me go back to the search. So let's say we wanted to look at another market. Let's say we wanted to look at gold. We can ask a question. Let's go back and ask the question. But first, we're going to go to seasonal trades, US futures trades, like so. And we're going to go to gold, like so. A moment, please. And we're going to ask the question, are there any high probability trades in gold in February? We're not going to fill out anything over here. We're simply going to ask the question, is there anything in gold high probability in February? Let's do a search. Oh, yes, the computer found some trades. On the short side, selling June gold, February 26th, getting out March 28th. This trade would require a stop of 100%, or in other words, no stop. So we're going to come back like so. We're going to say, we don't want to risk more than 5% as an example. So I can put my risk over here. And as you can see, no interpretation, no discussion about inflation, government, or anything like that. So the computer says 5% is not enough risk. We need to take more risk. So let's go back and do it again. Return to search. And let's risk 10% or less. Let's see what happens. So we can do this research and find completely mechanical trades. Let's find it. Here we go. So here is our trade, February 26th through March 28th, short gold, 6% risk. Let's look at the track record. Here's the history. 47 years of history. And here it is. Nice track record. A few losing years, but the losing years have not been so big. And the growth curve, very positive. Let me show you something else. People say that there are no seasonality in financial markets because financial markets are not related to weather or anything like that. Well, neither is the S&P, but let me show you something interesting. I'm going to go back to the search and we're going to go to an treasury bonds. So let's go back to the search and ask the question. Treasury bond futures. No, let's do it different. Let's talk about currency. Let's talk about the euro currency. So we'll go to the euro, like so, and ask the question, have there been any seasonal trades in the euro currency over the entire year that have been right 80% of the time or more since the start of trading in the euro? So this is a big question. Is there a big answer? Let's find out. Completely objectively, nothing. No problem. The question is, what about 75%? In fact, the minimum that I will accept in my trading is 70%. Most traders are happy with 50%, but I'm happy only with 70%. And I'm not going to put any time limit on it like this. Just show me 70% or more, no time limit. Search. And I get many trades. And here they are. I can organize the trades by entry date, like so. January, or exit date. I can organize the trades by percent win, like so. So this is the highest probability trade right over here. Short, March Euro, January 4th through January the 16th. And let's look at the track record, like so. 47 years of history. And again, track record like so. So my second work is seasonal, very effective and very clear, completely based on the rules. So let me go back now to the screen and show you it. Oh, one more thing. Let me go back here. We can do something else. We can also search individual stocks. Let me show you what I mean. I'm going to go back to seasonal trader, like so. And I'm going to do a search. Seasonal trades, US stocks, short term. So here I have a list of all the stocks that have shown a very high probability seasonality. So for example, let me just pick one, 3M and February, and ask the question, any trades with 75% accuracy, short term, like so. And this is perfect for options trading. Search. Nothing. Good. Information that there's nothing to do is good information because it means we don't have to waste our time. Will there be anything for March? Or can I search a few months together? March, April, and May, like so. Let's find out. Search. Yes, we have some. March 12th to March 18th, 6 days, 78% win. History, like so. 52 years of history, right over here. And here's the track record again. So we can search that. We can also search, let me go back, a group of trades. Example, Let me go back 1 moment, please. Return to search. So if I wanted to make a portfolio, so for the month of February, I wanted to look at maybe 10 different stocks like so, and build my portfolio like so. Say, show me trades in February, short term, with a risk of less than 5% that are short term. Do my search like so, and I get my list, Abbott Laboratories and Air Products. You will notice that the first few trades, Abbott Laboratories, are long, and then there's some shorts. The computer puts the best trade in the first position. 84% wins. Let's look at the history. And remember, this is a short-term trade. It only lasts a few days, 5 days, perfect for options. And here's the track record, like so. Let's go back to the search feature. 1 moment, please. And this data will be up to date at the end of the week. 1 moment. We can go back to the search like so. In fact, let's look at the next one right over here. APD. And here's the history. So this is the way that I trade. This is the methodology that I use, one of the methods I use. This is the easiest thing to do. We always know the statistics. We always know the numbers. Here's the history of this trade. And again, here's the chart. And I need the numbers. I always need the numbers because the numbers will tell me exactly what to do. So let's switch screens away from Seasonal Trader. Very effective. Seasonal Trader has made me a lot of money. The seasonals is my best work. It's the most specific and the most clear. So let me go back to the presentation, go to a new share and show you one more thing. Here we go. And let's go to the screen, like so. So what has happened so far today? We had a buy reach the first target, and we are now in a sell trade from here, small losing trade. But let me do something different. I'm going to show you what I call the 3 high-low channel. So I'm going to go to a daily chart of S&P. So get rid of all the stuff. Moment, please. Daily chart S&P. 1 moment. And here's the daily chart. I'm going to put 2 moving averages on the chart. 1 moment, please. Let me change this. Let me do this a little bit differently. Hang on 1 second, please. Moving average, high, 3. Just bear with me for a moment. Like so. Moving average, low, 3. Like so. I'm going to make the low 3 red. Like so. And here we go. So let me make sure the numbers are correct. Hold on, please. 3 high-low channel. You will notice something very interesting. Most of the time, the S&P trades inside this channel. So this would be the resistance and this would be the support. If we know the trend, we can sell at resistance and buy at support. Let me show you what I mean. I'm going to add a trend indicator to this. The trend indicator will be momentum. I'm going to make the momentum. Oh, sorry about that. Just one moment, please. Hang on a second. Momentum. 14. Close. And I'm going to put a 0 line on it. I'll show you what I mean in a moment, like so. So here is the complete package. I'm going to go right over here. And when momentum crosses below 0, like so, the trend is now down. If the trend is down, I will sell the top of the channel and swing trade, buying back at the bottom of the channel. If I want to be more aggressive, I can sell in the channel because you can see that as we approach the top of the channel, we continue to find resistance. So we can do this on the currencies. For example, let's look at the euro currency. Here we go. Here's the euro. And you'll notice, one moment, please. The trend turned bullish right over here. This was the buy. This was the target. So that's another way to do it. And this works extremely well with the bonds. Let me show you what I mean. The 30-year US bond. Like so. And you'll notice all the way back here. Just a moment, please. Here is where the trend turned bearish, right here. Every time we came up to the top of the channel, we came down again. So every one of these was sell, cover, short, sell, cover, short, sell, cover, sell, cover, sell, cover, short, sell, cover, short. And here it turns bullish and we reverse the process. So I showed you this morning, my time, 3 things. I showed you the 15-minute breakout. I showed you the seasonals. I showed you the 3 high-low channel. I want to make sure everybody understands this because these are my major methods. Any questions, Eduardo?
Yes, there is a question. If you use a programming language to program your trading strategies, or you just put it manually after looking at the screen?
We used a programming language, Trade Navigator, which is what I'm showing right over here.
Okay.
We can write the code in Trade Navigator, but it's very easy to do because the algorithms are very simple.
Right. Okay. Very good. And one more question is how you calculate the momentum. That is...
Momentum is very simple. So for example, if the closing price today is 10 and the closing price 10 days ago was 20, the momentum is minus 10. The 10-day would be minus 10. If the closing price today is 30 and the closing price 10 days ago was 20, the 10-day momentum is plus 10. Very simple to do. It's very simple mathematics. It's much better than a moving average because it shows you the direction of the market very, very clearly.
Very good.
So that is what I have for you today, Eduardo, because we didn't have too many questions. I went through it very quickly. but I'm happy to stay and answer any questions that people have.
So now is turn for the participants to ask any question. You can ask yourself directly, opening the microphone, or you just can put it in the chat box and I will ask Jake the question.
I'll be glad to answer any questions. I've been trading for a long time. Maybe I can teach you something.
Thank you, Jake. Hi, I'm Eduardo. I have a question. You said that when you were trading seasonals, you follow the 70% rule. Do your strategies keep having 70% winners back tested?
Yes, they continue to have better. In fact, they work better. Over time, the seasonal strategies have been increasing their average profitability from 70% to 73% now.
Wow. Awesome.
So they continue to work. You have to be selective. You have to use the stop, setup, trigger, and follow through, but they continue to work extremely well. I've been using them for 31 years now.
Great.
It's not perfect, but it's very effective. Okay, any other questions?
More questions.
I would like to ask, how many positions do you currently have simultaneously?
Most of the time I have between 15 and 18 positions. The markets that I trade are the US bonds, S&P, gold, crude oil, euro currency, coffee, cocoa, sugar, and soybeans. So those are the markets that I trade.
Right.
I also trade many stocks in my retirement account, but for stocks I use weekly. So for example, looking at this chart, we could change this to a weekly chart like so. And let me recalculate, one moment, please. So we can do the same strategy weekly or intraday. Hang on a second, please. So now, same situation, weekly chart, or we can go to intraday. So I could look at an intraday chart, the same strategy, smaller time frame, smaller profits, less risk. Any other questions for me?
Don't be shy.
No, don't be shy. Right. Well, maybe, you know, Eduardo, maybe I was so clear, no one has any questions because it's so perfectly clear, right?
Yes, it was very clear. I understood perfectly and it was very clear. But for instance, I have a question. I know that you follow the commitment of traders.
Yes.
Do you have any suggestion for our listeners?
Yes, let me show you something. This is a very good question, Eduardo. Hold on, let me get it. Here we go. Let me show you something very interesting. Here we go. Hold on a minute, please. You can still see my screen?
Yes.
Okay, hold on, please. I will find what I need here. One moment, please. It will only take me a moment. Let me get a different chart. Just a second, please. So as an example, here is a chart. I'm going to put the commitment of traders on here. The only number that I look at for commitment of traders is commercials. I want to know what the commercials are doing. So let's take a look at this market, for example, Palladium, COT commercials, like so. I'm going to change this to a different style chart. So just hang in there for a moment, please. like so. So look, this is the long-term chart of palladium going back many, many years. I'm going to expand the chart. So we're not talking short-term here. Let me make this a little bit bigger here. Just a moment, please. So this blue indicates commercial buying activity. I want you to notice what happens. Commercials are buying before the market moves up. They accumulate a long position. This is the current situation. The biggest commercial buying of palladium in history. And you'll notice from the point they started buying, this move from here to here is a $50,000 move for each contract. But let me show you something more interesting. This is commercial buying activity in cocoa. Look what happens. They're buying at the bottom, they're buying at the bottom, buying at the bottom, buying before the bottom, buying after the bottom, buying before the bottom. And so what are they doing now? Commercials were buying cocoa about 2 years ago because they expected this move up. Very important work on the commitment of traders. It's one of the most important indicators, but it is not short-term. It is only long-term. Any other questions, Eduardo?
Let us see. There is no more questions on the chat box. I don't know if any participant wants to open the microphone and ask a question. Seems there is no more questions.
Okay,
I like
well,
the presentation very much. And I thank you again for accepting to talk to students in Robotrader.
yeah. It would be longer if there was more questions, but my work is very simple. It's very clear. If anyone does have questions, Eduardo, you can give them my email address and I'm happy to answer the questions, okay?
Very good.
And good luck to everybody, good trading and happy health.
That's same to you.
Thank you very much, Eduardo and company. Take care.
Take care.